Hello, welcome to Business Week, the program that brings you top business stories that made the headlines during the week, including special interviews, features, and market data. Welcome to the show. Now, here is the highlight of the biggest stories we tracked for you over the course of this week. On the local front, the National Bureau of Statistics, in its latest report, recorded a further spike in the Consumer Price Index, which measures inflation in Nigeria, increasing by 18.17% on a year-on-year basis in the month of March this year. This is largely fueled by the Composite Food Index, which rose by 22.95% in March compared to 21.79% recorded in February this year. Also in the news today, the Central Bank of Nigeria disbursed a total of 803 billion naira intervention funds for the manufacturing sector as of February this year. And one of the biggest stories we also had during the week, the Nigerian Exchange Group, a leading integrated market infrastructure group in Africa, announced the launch of its new corporate brand identity and its website. The launch of the new identity follows the demutualization of the Nigerian Stock Exchange and the resultant creation of the non-operating holding company, NGX Group PLC, and its subsidiaries. In the energy sector, the Department of Petroleum Resources this week flagged off the Oil and Gas Industry Alternative Dispute Resolution Center with the inauguration of the Advisory Council and Body of Neutrals in Lagos. Now, talking about bilateral trade and relationship, the total volume of trade between Nigeria and France has dropped to $2.3 billion. That's according to the latest report for the year 2020 compared to the $4.5 billion recorded in 2019 as a result of the COVID-19 pandemic. All this was disclosed by the French minister in charge of foreign trade and attractiveness after a meeting with the Nigeria Governors Forum in Abuja, promising a win-win partnership between both countries. And still on the international front, the Organization of Petroleum Exporting Countries, OPEC, has raised its forecast for crude oil demand growth this year on the back of an expected stronger economic recovery. In its April monthly oil market report, OPEC says demand would rise by 5.95 million barrels per day in 2021, up by 70,000 barrels per day from just last month's announcement. In the cryptocurrency market now, Bitcoin also hit a record high above $64,500, extending its 2021 rally to new heights on the day Coinbase shares were due to list in the United States market. And talking about the United States economy, well, it is at an inflection point with expectations that growth and hiring will pick up speed in the months ahead, but also risks if a hasty reopening leads to a continued increase in coronavirus cases. Well, that's just the stance of the Federal Reserve Chair, Jerome Powell. It's now time to bring you our special packages by our correspondents. Today, we now start with reports around the ports. More than 720 cartons of codeine cough syrup have been uncovered in a 20-foot container by the Apapa Customs Command in collaboration with the National Drug Law Enforcement Agency. Now, this interception also sums up the seizures made by the command between January and March this year to 28. Correspondent Ifeanyi reports.
The latest interception of contraband pharmaceutical products at the Apapa port through joint interagency intelligence underscores the importance of intense scrutiny of imports through the seaport, considering that the seaports remain the largest and busiest border route and the highest recipient of containerized cargoes globally. Since 2018, when the federal government banned the importation and manufacture of codeine cough syrup into the country over gross abuse of the product, unscrupulous importers have been finding ways of bringing this product, and oftentimes security agencies in the port have been intercepting them. This time, 720 cartons of codeine cough syrup have been uncovered.
It is through the synergy and the information received from our sister organization that we're able to track that co-importation. And thank God and thank the sister organization, the NDLE, who have been tracing this importation way back from the country of origin. They have the intelligence and now they have followed it. This consignment is not even discharged in APMT here. It has been transited to another port, Unity Bonded Terminal.
This seizure, particularly this codeine interception, because it's one case that really took so much from both departments, both customs and NDLA. If this kind of shipment gets into the society, you know the consequences. So cooperation is working and is yielding, and we have seen the result.
Between January and March, the command says it recorded 28 seizures valued at more than 1.8 billion naira, many of which were imported under false declaration.
All over the world, this is what custom administration is facing today. Trying to conceal, trying to make some false declaration, and the reason for that is maybe you want to make more money. We get the seizures and we do the examination. We find out that the import actually contravene the existing import guidelines procedures, and therefore it is outrightly seized.
Within the same period, more than 159.5 billion naira has been remitted to the Federation account by the Apapa Customs Command.
Now, this second report explores the State Budget Transparency Survey for the year 2020. It shows that states have significantly improved in budget transparency. Now, the survey also, which saw Jigawa State with the best performance, had Oyo State as well as Zamfara State with no provision for budget transparency. Nara Folayo reports.
The result of the State Budget Transparency Survey shows that 12 states increased their scores by 20 points or higher, while 18 states improved their scores by at least 1 point. This was largely due to timely online publications of budget documents and enactment of procurement laws to better guide the process. Just a few states saw a decline since 2018, with Delta and Lagos states' scores decreasing by 21 and 22 points. Jigawa performed best on the index, as was in 2018, because it continued to provide citizens with extensive budget information and has mechanisms for public consultation.
Corruption in any country starts from the budgetary process. In very corrupt countries, the budget is done in secret, releases are done without knowledge of citizens, procurement information is not made available to citizens, and corruption is guarded and protected.
And for effective governments, it's extremely important that they have the tools, the platforms, and the structures in place to be able to deliver services, necessary public goods to their citizens at the subnational level all over the country.
And we as the UK are confident that the publication of this survey will spur further action in this regard, that states will learn from best practice, they'll learn from their peers. And we hope that states will also build on the recommendations of last year's survey around autonomy of state houses of assembly and supreme audit institutions. These are crucial reforms.
Oyo and Zamfara provided no budget information, with non-existent spaces for public consultation, as well as an unclear procurement process. Majority of the states, however, improved their 2020 scores on the State Budget Document Availability Index.
To achieve transparency, government at all levels are required to provide information about their activities and governance. Information that is both accurate and complete and made available in a timely way. The COVID-19 pandemic has further tightened the fiscal space of the states, and now more than ever, the states are required to drive actionable reforms that improve fiscal responsibility and ensure that the budget process is inclusive through citizens' participation.
The survey shows that all of the country's states can make significant progress in the medium term, provided existing reforms are sustained.
And now with those reports, we delve into the feature of the show today, bringing into perspective inflationary pressures Nigeria is facing and the need for urgent interventions and stimulus to stem the surging tide, as the high cost of living now puts more pressure on the pockets of the masses. We have details of this conversation and much more shortly after this break. Don't go anywhere. Many thanks for staying with us. Let's now deal with the big issue for today. One of the highlights of this business week is the latest announcement from the National Bureau of Statistics. It was long hours of fingers crossed waiting for the announcement of the March inflation rate, and just as many economists had forecast, an 18% threshold was imminent. The Consumer Price Index, which measures inflation, increased by 18.17% in the month of March this year, recording about 0.82 percentage points higher than the rate recorded in February, which was pegged at 17.33%. Increases were recorded in all of the COI-COP divisions that yielded the headline index. Now, the urban inflation rate increased by 18.76% in March, as well as the rural inflation rate also increased by 17.6% in March as well, from 16.77% recorded in February. One of the biggest drivers of the current inflationary pressures is the Composite Food Index, which rose by 22.95% in March this year compared to 21.79% recorded in February. The rise in food index was also caused by increases in prices of bread and cereals, potatoes, yam and other tubers, meat, vegetable, fish, oils and fat, as well as fruits. Joining me now via Skype to deliberate on the impact of this report on the state of the Nigerian economy is Olumide Eson, the partner, Tax and Regulatory Services, Deloitte. Good to have you on the show. Now, the news of the inflation rate now at 18.17% really does not come as a surprise, but the bigger concern on every Nigerian's mind is what this translates to in real economic terms on the already fragile business and economic climate, as there are profound consequences for all of us, literally, including households, businesses, investors, weakening purchasing power, and also escalating operating and production cost while eroding profit margin. Let's have your first reaction on this consecutive rise.
Yeah, thanks, David. I think the key thing you've mentioned is the erosion in purchasing power of people. And I think that's what typically happens when you have trending inflation. We've been on this journey for a while now. Last month, it was 17.33 year on year. Now we have 18.17, which is 0.82% higher than what it was last month. We all know that primarily what is fueling this is food inflation, which is 22.95, and 1.9% on month-on-month basis. Now, this is not surprise for a lot of us because, we constantly are challenged with the harder farmer crisis. We have, banditry, castle rustling and general insecurity in the country. And these all fuel inflation at the end of the day, albeit indirectly, through the impacts on food prices.
Well noted there, but now both at national and subnational levels, what mistakes do you think we're still making in attending to the food crisis in the country with regards to investment in agriculture value chain and also boosting value addition? These conversations have to just be taken much more seriously.
Yes, I agree with you. I really don't think it's about mistakes we are making. I think it's just the fact that we have not gotten it right with, the security situation. And I think government is trying its best. Now we have new security chiefs, including new police chiefs, and they need to come up with more creative and, decisive policies to address insecurity across the nation. Even the Southeast governors recently announced the formation of Ebubeagu. All these are, attempt, to address the security situation. I think if you unbundle the inflation figures, you see that it's largely fueled by food, yes, which is impacted by insecurity, yes, but also there is debate about imported inflation, which has to do with the cost of imported goods into the country. Of course, because we have been challenged with foreign exchange in recent times, that is why we are dealing with that. But the good news is that oil demand is on the recovery path, and hopefully with the ease of OPEC restriction as well, we should have some more forex inflow into the country, and hopefully the CBN can intervene more in the importer and exporters window, and then lessen the pressure on Naira. I think it's good to mention that while we may still be challenged, a lot of work has gone into COVID intervention, by the CBN in the agri sector, hundreds of billions, and also in the manufacturing sector, so almost ₦1 trillion. I think in the immediate future, we should start to see this bear some fruits. I think it's not all doom, because I think IMF has advised that we should expect a growth and expansion in our economy of about 2.5% this year. So I think we just need to wait and keep faith.
Do you think we'll see any plateau in sight, as we've already had months and months after consecutive spikes? Some analysts say the figures we have are conservative, not really painting the real picture of how harsh Nigerians are facing inflationary pressures, while others are optimistic, cautiously, that by the third or fourth quarter of the year we would see a gradual reversal in rates. What sentiments do you share?
Well, I believe that we can flatten the curve, third, fourth quarter of this year, truly. We just need to sustain the various incentive programs we have in place and the various interventions that we have in place. And we'll start to see results, around third and fourth quarter. But I think we must also be mindful that we need to protect the fragile situation. For example, if we have an upward adjustment in the price of petroleum products, which directly, impacts transporters, then you will see it spiral back into inflation. I think whatever we decide to do at the end of the day with petroleum products pricing, we must protect the agri value chain to ensure that this doesn't, spiral out of control.
Now, key inflationary drivers are supply-side shocks, which are also beyond monetary policy control. But now, do you think the Monetary Policy Committee has been pushed enough to the wall, considering tightening in its stance?
Well, now that's a billion-dollar question. I would attempt to give my views. The Monetary Policy Committee, always have this tough decision, to achieve a delicate balance between stimulating, economic growth and output versus curtailing and controlling inflation. If you control money supply, if you make it, unbearable for people to borrow loans, yes, on the one hand, you may win and you may start to, ease off on the inflation trend. However, at the same time, you will be stifling the economy. So the challenge is always there for them to, maintain, that delicate balance between stimulating, economic growth and output versus, controlling inflation. Yeah, so the MPC, they continue to focus efforts on stimulating output, and at the same time, controlling inflation. It's a delicate balance which must be achieved. On one hand, if you want to fully just control inflation, if you raise the MPR, monetary policy rate, then there will be less money available for people to use in the economy, and there will be, an effect on inflation because of controlling inflation for yourself. You increase monetary policy rates, you tighten liquidity ratio from the current 30%, then you may be able to achieve the issue on inflation. But then, when you are doing that, what you are inadvertently doing is you are hurting the economy. You are halting, the growth in the economy. So the CBN and the Monetary Policy Committee always try to ensure that they achieve a very soft balance, ensuring that you're able to stimulate the economy, make interest rates affordable for companies to borrow and to invest, and also at the same time try to control the inflation from getting out of control. I trust their judgment, and I know that each time they met, they always consider all these scenarios. And I know that when they do meet again, the last time they met in March, you recall, they considered all this and still maintained an MPR of 11.5 and liquidity ratio of 30%. When next they meet, I'm sure they're going to consider all these scenarios and take a decision on behalf of the country. Well, if you consider the fundamentals, the last time they met, that hasn't really changed. Yeah, given inflation rate has moved up by 0.82%, but I'm not sure that would trigger a change in their views just as of now.
Now, the value of the naira in hand also raises concerns of continuous devaluation. How can we explore more innovative tax collection measures and strategies, and also expand the net to meet the current revenue deficit we have in the country? Our debt levels have raised many reactions from the international community. Likewise, our foreign exchange policies, we've had reactions from the World Trade Organization, IMF, the World Bank. But how does the naira then become a worthy tender?
Okay, thanks for that, David. I think we should start with the issue of the naira and the value of the naira. I think COVID had impacted us indirectly because it impacted the oil demand. But now on the part of recovery, what we're seeing is the oil demand is firming up. And what that simply means is potentially more dollars for the CBN. With more dollars in that of CBN, they could probably make more interventions, in the I&A window, and by so defend the value, of the naira. But more importantly, we know that will not be sufficient for an import-dependent economy like ours. We need to look at import substitution a lot more critically, and I think government needs to, probably consider the Pareto 80-20 rule, which of course, it's the 20% causal effects that results in 80% of the consequences. So what are those 20% items that we use our FX to import all the times that is consuming 80% of our FX outside of refined petroleum products? If we identify those 20% items, government can set up special economic zones for them, show keen interest, provide infrastructure, provide some incentives, and we can domesticate the production of all those items which Itato will be spending 80% of our FX importing. If government can do that, and then the oil recovery also is full, then we can be happy, because we know then that we'll be able to defend naira for much into the future, of course. And also we continue to focus on our industrialization agenda. So that's the bit about the naira and defending the naira. I think on the tax bit, it's a bit delicate. Yes, we agree Nigeria is lowly taxed. Our tax to GDP ratio is really so small, about 6% compared to our peers and neighbors, African countries, and all that. But whilst one would say there is need to reform that system, be able to get a lot more, what government needs to do is to widen the tax base. There are still a lot of people in this country who do not pay taxes, or if I use the phrase of UK Prime Minister, those who do not pay their fair share of taxes. So maybe government needs to look more into those, sets and categories of people, widen the tax base, not necessarily increase the tax rate. And if government must increase tax rates, government must ensure that the vulnerable and the low-income earners are protected. And there's so many ways government can do this. Government can use, steep, tax rate bans. In the UK, for example, the first tax is at 20%, and that covers the first £50,270. And then the next tranche is 40% for any income over and above, 50,270. You can see that huge jump. What government has done is to protect the low-income earners. And I think that is where we need to go to as a nation as well. Protect low-income earners, protect the vulnerables, and, such that, as people become more prosperous, they pay more taxes. That's what progressive tax system is all about.
Now, wrapping up our conversation, let's now talk about competitive pricing. At the end of the day, we Nigerians are paying way too much. Now, looking at the AFCFTA inside, how then do we now also start adopting cost-cutting measures that would help us to also have that comparative advantage in terms of our pricing along the region?
Yeah, I mean, that's a good question. And, I was involved in a conversation not too long ago. And so the entrepreneurs were saying that, the bulk of what makes Nigerian products uncompetitive had to do with, cost of infrastructures. And I think that is basically beyond what the average entrepreneur can actually handle himself. Governments need to fix infrastructures. And of course, they've been borrowing a lot to fix infrastructures, but there's still a lot more needs to be done in the area of infrastructure. But to encourage, leveraging on the after provisions, there may be some targeted incentives, which government could put in some special selected, economic zones, just to ensure that Nigerian products are competitive outside of the country. If we do not invest in infrastructures, if we do not invest in what I call targeted incentives, we may not be able to get much out of AFTA. As a matter of fact, we may become a dumping ground. No matter how sophisticated an economy is in the world, there's still some level of protectionism that that goes on there. And government must look for what exactly should be protected in Nigeria and how that could be protected without necessarily violating the rules of the World Trade Organization.
Thank you very much for your contribution on the show so far today, Olumide Eson. It's been a pleasure speaking with you.
Thank you so much for inviting me.
Well, just before we go, I'll leave you with some graphic details of the commodities and money market. That's it on this edition of Business Week. Many thanks for watching so far. Do enjoy the rest of your weekend. I'm David Alabi. Bye for now.